Hello, ladies and gentlemen, and welcome along to IMRG's weekly retail data show. We are on number 118. Can you believe it? We've been doing this series for 118 episodes. Coming up today, we've got lots of good stuff for you. It is all around Black Friday, what to expect in the run-up, how things are currently trading, lots and lots of interesting stuff to show you. But first, because it is a number 118, I've got two interesting facts for you about the number 118. It is the number of elements on the periodic table, didn't you know? And also, remember 118, the directory inquiry servicing? When BT actually closed down their original direct inquiry services, 118 was designated to all the companies that thought they would get involved and supply the service themselves. The second three numbers were allocated by random. And it just so happens that one lucky company managed to get 118,118. They then sold that number for £2 million to the company that we all know with the two marathon runners and the mustache. £2 million based on a bit of luck. So let's hope luck is with everybody today when we get into today's agenda. So what have we got? To start with, at the top of the show, we're going to talk to you about how last week performed with anything interesting that we've got to show you there, which there are some nice, interesting stuff, a few little tidbits that are worth noting. And we've got three guest speakers today. We've got Akinio up front, who's going to talk to us about things you need to consider with Black Friday just on the horizon. IMRG, we're then going to talk to you about what we currently think Black Friday is going to actually look like based on how the current trading looks like. Then we're going to have a chat with Certainly around how conversational AI might be able to help you. We're going to then have a chat with Bobby from GFS around protecting delivery during Black Friday. And then lastly, to cap off the top of the show, we're going to show you some interesting stats around campaign launch dates for Black Friday. So the whole show is around what we think is going to happen in the silly season, which is just around the corner. It is less than a month away, boys and girls. So I hope you are ready. So let's crack on. Let's go to the first part of today's show, which naturally is going to talk about what on earth happened last week. So let's take a little look. And we're going to go to the IMRG dashboard that we have here. This is where we keep all of the market data that IMRG has. In case you don't know, the quick 30-second review of what this is actually containing. IMRG have a panel of retailers. There's about 200 of them that every week give us their website sales figures. And we then collate all of those numbers, put them into a dashboard that you are looking at. And the basic idea is that it gives you a very good idea as to what the wider market is doing. This represents about £26 billion of online spend each year. So what happened last week? Well, you won't be surprised to know it was much of the same, really. It was down 4.9% year on year. If you cast your eyes to that left-hand side chart, that is showing you the year-on-year revenue growth for the last 4 weeks. And the rightmost block is saying minus 4.9% year on year in comparison to the same week 12 months ago. That line represents every single retailer in our panel. It's the total market line. And so far, we've had 3 weeks of October, these three most righter columns, and it generally is placing somewhere between -2 and -5%. The 3 weeks, you could probably estimate with a reasonable level of confidence that the following weeks of what is remaining in October will likely come out somewhere similar. And overall, that's going to give you an October result of somewhere between -3, -4% would be a fairly robust forecast. If you cast your eyes over to the right-hand side chart, that's showing you the most recent 12 months. And looking at September's result of -3.3 and August's result of -4%, October is pretty much going to be more of the same. Nothing super, nothing extraordinary. It's kind of continuing along the expected trajectory. But this is looking at total market. something that I wanted to show you today is a few categories in a little bit more detail. So we're going to look at the weekly intervals for the last 4 months. And what you've got there on the chart at the bottom is exactly what you think. It's year-on-year growth for total e-commerce over the last 4 months. But I'm going to add in clothing. And just to show you that yellow line that's appeared there, that is every retailer in our panel who gives us clothing data. Clothing has, for most of this year, been the standout performer. It's been the best product sector out of all the areas that IMRG track. And notably, within clothing, menswear and womenswear are performing much different. So we've added menswear in the blue there, and womenswear in the pink. Now, for whatever reason, womenswear seems to be doing much better. But notably, both of them are on a downwards trajectory. Kind of if you cast your eyes all the way to the left-hand side, the results back in the summer were much stronger for clothing. It is definitely starting to show signs of running out of steam, I would say. By comparison, let's add in a few other product categories that you might be interested to see. Let's take a look at electricals, gifts, and health and home and garden, I think is probably a good one. So those 4 categories there, gifts at the bottom in blue really has been struggling for a long while. And last week's result was the worst it has been in a very long time. In fact, it was minus 32% year on year for last week in comparison to 12 months ago. Really not strong at the moment for gifting. Electricals is meandering along somewhere between minus 10 and minus 15% year on year. But the bit I wanted to point out to you is the green line, which is home and garden. Home and garden is starting to look all right. In fact, it is for 2 weeks now, has been in positive growth and has done better than clothing. If you were to have said that 4 months ago, i.e. cast your eye over to the further left-hand side of this graph, the distance between clothing and home and garden is quite large. Now, home and garden is actually made up of quite a few different parts, and we're able to show you which part of home and garden is the one that's driving the growth. And the answer is not what you might assume. So if we just reduce this graph down now to just the home and garden stuff, I'm going to bring in furniture and homewares and decorations, 2 different areas within home and garden. And what you'll see is quite interesting. In the blue there, furniture is the bit that's been doing quite well. It got into positive growth first, and it's actually keeping its head above water. Whereas homewares and decorations, not so much. That's still doing negative year-on-year growth. When we look into the numbers as to which part of furniture is actually doing well, if you were to separate out the type of companies involved in that furniture line, it is the budget end that is doing the best. The cheaper retailers within furniture are doing really well at the moment, whereas the more expensive, the premium end of furniture, not so well. It's kind of minus 10, minus 20% year on year each week for those more expensive categories, which kind of makes sense. At the moment, you can see the market moving towards the cheaper stuff. But what is extra interesting is if you take this over and look at the average basket value. So with that in mind, let's go take a look at furniture and homewares and decorations, what the basket values of those 2 have been doing. We switch across to the basket values on this dashboard, and we're going to look at the last 4 months. So the same time period is what you just saw on that previous graph. And I'm going to add in those 2 categories that we were looking at, furniture and homewares and decorations. The average basket value for furniture has been going up and up and up since about mid-August, whereas homewares and decorations has remained relatively flat. So what seems to be happening is people are buying from the cheaper retailers, stuff that is less expensive, but when they are doing so, they are transacting with a little bit more spend. So you might think perhaps retail customers would previously have gone to, say, a mid-market retailer and spent X. They're taking that same amount of money and going down to the cheaper people and seeing the value that's there and spending perhaps a little bit more. and getting more for their money, one would assume. But on that previous chart where I was showing you clothing and I was showing you home and garden and electricals and gifts, there was one product category that I didn't mention, and that's for good reason. I didn't show you health and beauty because they had a very interesting story last week. Let's jump across to a part of our dashboard called Latest Results. This is going to show you exactly what it says on the tin. On the right-hand side, it's going to show you a table will load and be the most recent complete month, which is September. And on the left-hand side, it's going to load a table that is the most recent complete week, i.e. week commencing the 16th of October. We're going to have a big list of all the categories down the left-hand side. Now, health and beauty has a really interesting story for last week. And here we go. Here are our numbers. Take a look at this first column here, week on week, for the health and beauty category. It had a surge of money spent on it over last week, particularly makeup, a whopping 34.7% up week on week for last week in comparison to the previous one. Now take a guess, rack your brain. Can you think of anything that might cause that uplift? It's Halloween. Lots of people going out, buying their Halloween makeup, getting themselves dressed like a pumpkin, and getting that Halloween outfit, spending a lot more on makeup for that week. And we know that. We've spoken to retailers. They've told us that. So you can see the promotions on their website for Halloween makeup. It's quite a nice little week-on-week uplift. And indeed, in terms of annualizing that, turns out it's just slightly higher than previous years as well. So well done to all the health and beauty retailers selling makeup. Seems like a lucrative period indeed. But that is the end of the kind of latest results. Later on, we're going to talk about what this all means coming into Black Friday. But first, we're going to bring on today's first guest. It is a man. Oh, no, it's not. It's not. Forgive me. I have something to promote. We have a session. It's a virtual roundtable. Believe it or not, IMRG do more than just this webinar. We do loads of events across the year, and one of which format type is a virtual roundtable. We'll get 15 retailers on a Zoom call, and it's a great discussion amongst peers. And we've got one coming up on Wednesday, the 9th of November, all around launch dates and customer behavior for Black Friday. If you want to come along, the link has just been popped in the chat. Take a look. You are welcome to attend, boys and girls. But now, I must apologize, the slightly false start with our first guest speaker, but I can welcome him along properly now. Jack, how are you doing today, sir?
Hello. Yeah, I'm great. Thank you, Matthew. Thanks ever so much for having me.
It's lovely to have you on as a guest.
Might be the closest opportunity I get to being on TV.
You're a mini celebrity for the day.
This is it.
Jack, could you please introduce yourself, what you do, and importantly, who Akeneo are and what Akeneo do?
Yeah, of course. Yeah. Hi, everybody. So my name is Jack Chutin. I'm an enterprise account executive here at Akeneo. So I'm sure you're wondering, who is Akeneo and what we do? Essentially, Akeneo is an industry-leading provider in product information management software. We're celebrating our 10th birthday. We're a French-owned company headquartered in Nantes with offices around the world. I'm in the London one, and they put me in a little soundproofed cubbyhole here. We're particularly strong in the fashion sector, retail, home and garden, furniture, the FMCG space, and automotive sectors. We work very successfully with some recognizable brands like Boohoo, Dunelm, Jaguar Land Rover, and LVMH. We've currently got over 750 enterprise level accounts on our books. Essentially, what we look to do is help businesses grow in three ways. So we look to help businesses sell faster. So that might be reducing time to market of new products, improving workflows, and utilizing automation. We look to help businesses sell better. So how can we improve product experiences to increase conversion, drastically reduce returns, and remove things like human error, and ultimately improve product data quality? And then the third one is how we help people sell anywhere. So enabling business to set up new sales channels with a few clicks of a button.
Marvelous. Very well explained. Thank you, sir. I feel like
no trouble.
I feel like I know you now.
Good stuff.
So let's have a quick chat around. You can't avoid it. Black Friday's around the corner. The other
Yeah.
thing you can't avoid at the moment is the cost of living crisis. So how is that cost of living crisis impacting Black Friday from what you're seeing?
Yeah, certainly. Let's explore that. I think not to put a downer on the mood, but yeah, the living crisis is absolutely real. I think we look at this in terms of looking at the status quo and then how this is impacting customers and how it's impacting businesses. I think I'm sure we're all aware, but inflation's risen. You know, if we look at September last year, it was at 3.1%. It's now at a staggering 13.2%. Obviously, we've got the energy cost crisis affecting everybody in the UK with, unfortunately, the war in Ukraine, and then we've got some political uncertainty as well, with obviously the resignation of Boris. We've got Liz not quite lasting as long as a lettuce, and then we've got Rishi coming into power. So unfortunately, that's impacting the strength of the pound against other currencies. And then the last bit to add insult into this as well is the relentless backlash of the UK leaving the EU. So it's a very poignant question. I think if we look at how the living crisis is impacting customers and consumers, if you look at figures from retailer economics and Metapack, it's suggesting that spend over the next 3 months is going to drop by £4.4 billion. Nearly 60% of shoppers in the UK are expected to cut their spend compared to that of last year. However, there is some optimism. So a recent study published by Emarsys, where they interviewed 306 US consumers, found that 1 in 5 of those plan to increase their spend. And importantly, 1 in 10 of those are stating that they're absolutely going to use this period to get all of their Christmas shopping done. So with this cost of living crisis, consumers obviously are going to be looking for things like unmissable value. They're going to be looking for those one-off deals, those things that they just can't afford to miss, some really extreme and heavy discounts. But most importantly, they're going to be looking at making those purchases from reliable and trusted retailers. And I think potentially retailers that they've used before and had good experiences with. I think things like quick delivery and ease of return is going to impact this as well. And then customers and consumers are really going to expect to be well informed of products across every different channel that they choose to interact with the brand. So it's really key that that people get that right. A thing to think about for businesses, I think, due to that drastic reduction in sales that we're predicting, and I think we will see, is that there's obviously a cost to holding excess stock. So what we're seeing from the likes of Amazon and the Targets of this world is that they're actually having kind of really prolonged sales for they're starting them earlier and they're doing them for a lot longer. We're also going to see some retailers simply not participating, and they're just not going to be able to compete. I think the next thing that we really need to think about, obviously with price being so poignant, is how people can remain competitive if they don't want to go into that price war.
So with price sensitivity being like so dominant in kind of around Black Friday and with cost of living crisis, what other factors are there that retailers can look at that might help the success of a Black Friday or Cyber Monday?
Yeah, certainly. So rather than competing on price, I think customers and consumers are really going to be looking at that customer experience, that buying experience, and that product experience. People are going to be looking for that feel-good factor. They're going to want to have affinity with a brand and want to build loyalty and trust with that brand. And if they're spending that hard-earned cash that perhaps they don't have as much of this year than they did last, then that's certainly going to be a way to improve. So how is it we look at building out a good product experience? We can look at 3 different types of data that you could utilize. So we have technical data, usage data, and emotional data. So technical data is that kind of black and white makeup of a product. It could be things like materials, colors, weights, sizes. Most businesses typically tend to have the resource to be able to get this done, but that's really only going to make sure a product is presented well online and maybe shows up on Google. But the next thing to try and focus resource and that value added stuff that your teams can do would be into usage data. So I think if we're looking at example, if maybe you're looking at buying a new fridge freezer, you probably don't buy one of those. You maybe buy one of those every 10 years, for instance. It might tell you how many cubic liters are in there, but that doesn't mean kind of anything to me and maybe to most. And so this is the type of data that's going to help you contextualize it, help you envision how you're going to use it. So maybe information around how it would perform in terms of storing maybe a family of four's weekly shop, and what that weekly shop looks like would be far more helpful to help you make that purchase. And then what we've got is the emotional data. So I guess if we look at maybe like big sporting brands are particularly good at this. Car manufacturers are great at it. If we looked at maybe buying a pair of football boots on Nike's website or Adidas website, yes, we've got the technical data there, but the vast majority of everything that you're immersed in is all going to be about how is that going to impact your playing ability, how are you going to make an impact in the match, what's the end result going to be, and really help kind of build in that kind of vision of what it's like to build that to buy that product and use it. A really good example of that would be Dishoom for me, the Iranian Indian cafe concept restaurants that are popping
Delicious
up.
place.
Yeah, absolutely. So a very immersive experience. The menu's great, and they're known for doing a really great breakfast menu. And what they went into is home cooking kits. So you've got that technical data, maybe your contents, ingredients, weights, allergens, that type of stuff. Your usage data would be stuff like recipes. It would be videos and tutorials. And then you've got that emotional data, which is all around creating that restaurant experience in your own home with your loved ones and making memories. So I think there's some factors that is all around offering improved product experience.
Well, I know what I'm having for dinner this evening. That sounds
This is
fantastic.
Yeah, get ordering.
So, as we mentioned at the beginning of this show, Black Friday is literally right around the corner. Hopefully everyone watching as a retailer has got something prepared, but what can they do to avoid late panic and just go, oh my God, what can they do?
Exactly. So hopefully everybody listening to this has had many meetings a couple of months ago and is feeling very, very set. I think when people interact with Aquino and the people that we speak to on a day-to-day basis, when they're managing all of their products and trying to sell them, they have multiple teams working on them. All the products information is being stored in different spreadsheets. You've got images being sent by email, people working in shared worksheets, and processes from the genesis of a product to getting it onto your website tend to be pretty convoluted. I mean, we hear sort of horror stories of people having to, launching products too early, launching products too late, not launching products on at the specific time, people staying up till midnight to click a specific button, and obviously that can dramatically impact your sales and your performance during this period. So I think the main kind of message here is that your tech stack is really important, and technology is absolutely there to help you. So whether it's your ERP system, your DAM, your PLM, CMS, CRM, your PIM, I'll see how many I can throw out to you, or your ESP. If you utilize all of these different technologies and platforms correctly, then you can really look to essentially automate a lot of the manual processes, a lot of that heavy lifting, so you can focus on those value-added tasks and really create personalized experiences that that customers are expecting these days.
So we've got about 60 seconds left, and one last question. So I've got one last acronym for you as well. PIMS. PIMS
Yeah.
is what you guys are experts at.
Exactly.
Tell me, what role do PIMS have in Black Friday?
Sure.
Let's cap it off.
Sure. So PIM isn't essentially reinventing the wheel or particularly rocket science. I think people see PIM very much as a productivity type of tool. What we really want to enable with businesses is to add value and help you sell more. So selling faster. So how do we improve your time to market? So whether it's improved data collection workflows, whether it's seamless integrations or collaborative workflows within your teams for improved data enrichment, help people selling better. So how do we improve product performance and offering that complete product experience to increase conversions, reduce returns, reduce human error, and keep consistent brand consistency. And then that sell anywhere piece. So setting up new channels. Do you want to sell in a new marketplace? Do you want to launch a new e-com website? Do you want to start selling into a new region? That is the nirvana of a PIM.
Jack, thank you very much. I hope you enjoyed your moment on television.
Yeah, thanks for having me. Cheers, guys.
Thank you. All right, up next, we have a little bit of kind of what our expectations are for Black Friday based on the current trading. So bear with me 2 seconds. We're just going to flip over screens, boys and girls, to what we're going to do is essentially look at history of the current market of how it's trading in comparison to what that then ended up doing over Black Friday. So here's how it's going to work. We have plotted a chart whereby we're looking at year-on-year growth, and we are looking at the 12 weeks out from Black Friday up until the big week itself. So big week over here, and then up to about 3 months over here. This red line is what happened over 2019. So you can see it did pretty well overall, kind of positive growth from a good kind of 9 weeks out, and you ended up with about 11% year-on-year growth for that year. Then along came the pandemic and ruined all of the trends, and it exploded. Now there's a big uptick in growth here, and people with a good memory will remember that about 3 or 4 weeks outside from Black Friday, on the 5th of November, government got up and said, yep, the high street's going to be closed. That then ended up with a spectacular couple of weeks of year-on-year growth, and it did drop down for the big week to 15% year-on-year, but don't think that's a disappointment, because 15% growth on the biggest, largest, extraordinary day of the year, week of the year, is actually quite good. Following year, however, in the blue there, it wasn't particularly good. It was negative growth for the full 12 weeks, pretty much, barring 1 week, 4 weeks out. So the reason that was so negative is because of the huge benchmark that it had to build upon from the yellow line, basically, the pandemic year. And then we bring in the green line, which is 2022, where we are currently at. Now, you can see quite clearly that that green line is matching the blue line most. It's not close to the red line. It's not close to the yellow line. So you can use 2021 as a fairly good proxy for what you think is actually going to happen over the Black Friday week. And a decent bit of confidence would have me say, you know what, it's going to end up somewhere around here, around the -5%, -7% year-on-year growth. So not huge. But each of those lines represents total market. There are varying performances going on between 2021 and 2022 years across the different product sectors. So first, we're going to look at clothing at the top and health and beauty at the bottom. What we've done is just isolated the 2021 year and this year, because they're the ones that seem to be matching the best. At the top, clothing, you can see it is starting to fall away. It's not looking like it's going to do as promising performance as it was the year before. So you can kind of map that along and assume it's going to end up somewhere, perhaps maybe on the line, maybe 0%. Health and beauty is the one that isn't sticking to trend as closely as any other factors are doing. Health and beauty has been a weird one all year. It's been going up, it's been going down. It's really had a topsy-turvy year. It's probably the hardest category to forecast about what it's going to do. So good luck to those guys in health and beauty, because we're not entirely sure where it's going to end up. But we have made a forecast, which I'll show you in a second. Home and garden is being nice and reliable. It's keeping its kind of tracking fairly straight. It is doing better than it did last year at the top year. The red line is above the blue line quite consistently. So you could forecast year-on-year growth for home and garden, possibly being somewhere around -5% would be a decent estimation, I'd say, based on that. And at the bottom, gifting, again, is just having a terrible time. It really isn't having a good season at all. You're probably looking at some fairly chunky negative year-on-year growth. But that is year-on-year. What is interesting to note is also week on week, which is the idea of how money is starting to increase as you get closer and closer. So basically, the data point is going to show was more or less money spent on that day in comparison to the previous week. This is what 2019 looked like. It goes along nicely, and then as soon as you get to about a month or a month and a half out from Black Friday, the spend goes up and up and up and up as the weeks go on. If the data point is above the 0 line, it means more money was spent on that week than it was in the previous week. If they are continually above the zero line, it means that more and more and more and more money is being spent online, which is what you would expect as we build up to Black Friday with the whopping great big spike there. 2020 followed a similar trajectory. 2021 did that. And for 2020, we are doing this. So again, you can see that yellow line, the current year, is matching the blue line last year fairly tightly. So if you were to kind of work out what that actually means for your week-on-week growth, take a look at last year and you're going to have a fairly good estimate as to what's going to happen this year. And lastly, if you would like some kind of forecast, we've shown this a few times, but just as a reminder, these are the official forecasts. We got scientific, we got the calculators out and properly worked out what we think this year's Black Friday is going to do. Along the top, you have total market, you have clothing, health and beauty, home and garden, and electricals. These are the results for the Black Friday week last year. And these are the numbers we are forecasting for this current year. We did this forecast probably about 6 to 8 weeks ago. And based on the extra information we've been able to gather in those 6 to 8 weeks, I would say these numbers are probably the best that it's going to be. It is unlikely they will be better than those numbers. If anything, they could be a little worse. So on that wonderfully positive note, we're going to hand over to our next guest speaker. We've got Certainly as a guest, and we're going to talk about how conversational AI can actually help with Black Friday. So, Henrik, are you there, sir? How are you doing?
I'm doing very well, thank you. How are you?
Not too bad, not too bad. Where in the world are you based, Henrik?
So I'm based out of our Copenhagen office, so where we're headquartered. We have people on the ground in the UK as well, the US and in Southern Europe.
And can you bring some envious delight to us? Is it sunny where you are?
I can tell you it's going to be 18 degrees Celsius tomorrow.
Lovely. Lovely.
And I'm looking at a clear blue sky here. But, you know, yesterday it was raining when I was out playing some late night football. So.
Oh, very jealous.
It's very, very similar to Britain, I think.
Nearly. So, quick intro. Can you introduce yourself, what you do, and importantly, some stuff around Certainly as well?
Yes. So I'm Henrik, and I am from Certainly, and Certainly we are a conversational AI platform for e-commerce. So that means that our customers use our technology to understand their customers better through conversation, and that helps them sell more of the right products, reduce returns, even do some support stuff as well. And we have customers around the world, in the UK, to name a few: Rat and Boa, Lucien Yak, the Fragrance Shop, Ticketmaster, etc. So we're having a lot of fun in the UK.
Very nice. So let's have a quick chat about the kind of the chatbot thing that you mentioned there, and then we'll kind of move into how that might influence Black Friday. So in your opening monologue there, you mentioned the idea of conversational AI. So how is a chatbot with conversational AI different from another chatbot? What's the conversational AI there?
Yeah, no, it's a good question. It's sort of a continuation of where sort of chatbots they started. You know, the automating FAQs in a conversational way, so you can click your way through, click some buttons, and you get to a result on the website or in WhatsApp or Messenger, etc. That's very fine also for support. But if you then add conversational AI on top, which is basically AI that is able to understand the language you speak in, what are you thinking about, what are your intents, why are you there to purchase, how are you feeling, etc. And that opens up a wider range of use cases and applications for it. One is, of course, if you can understand better through AI, that means you can have a lot more conversations with a lot more potential customers. And that's really interesting. Because one, of course, you can use it to mine that data and understand your visitors better from the horse's mouth itself, as opposed to anything else. But at the same time, you can also use it to, of course, if you understand why I'm there today, what my concern, then you can use that to then drive a conversation towards a potential purchase. And you really want me in this day and age to buy the right shirt with the right size. You don't want me to put 4 or 5 different sizes of the basket, because then I'm going to return nearly all of them except the one I'm keeping. So if you can do that with AI and do that at scale, you have a huge advantage. You help me buy the right product, but you also downstream, you save a lot of costs, and you even help the environment. So that's what the AI bit enables you to do that at a much larger scale.
So I'm going to ask a very simple question now. Please don't think less of me. But what's the actual benefit of having a conversation with your customer as opposed to just letting them come on? And
yeah, well, I think the real question here is, as well, as if you could have more conversations with more of your customers, would you then be able to understand them better and then sell more the right products? Because I don't think anyone is as sort of like you intuitively you understand that if you and I have a conversation, you understand me better. And if it's in a purchase situation, you can pick up on why I'm there. Is it really, do I want this as a like slim fit or wide fit or etc. All these types of things. And if you can do that at scale, that means that you can also pick up on all the different subtle changes. Like the whole show you have on here is actually to show the variations, the changes, what's going on, so you can predict the future. Well, if you have more conversations, that means that you have more first party or zero party data from your customers. And that we believe that's super valuable. And the same, the brands that use our product believe that's super valuable, because you tap into the minds of people, and even the ones that don't end up buying something. So if you have a 2%, 3% conversion rate, if you get to talk to all the others, maybe you figure out why are they bouncing off your product page? Why are they not adding products to the checkout? We have one example, the very famous American YouTuber, Mr. Beast. Yep. He launches a stream of D2C brands. The latest one, Feastable, where they launched it's a very new product line. They use our technology. During the first couple of weeks, they had like 100,000 conversations, where then they were able to use our tool to mine that, to figure out that, hey, the reason why they weren't converting more is because people had questions about the ingredients, etc. So they're able to pick up on that and change their product information and how they were serving their customers much faster than if they had done some qualitative interviews 3 months down the line, etc. So it's really about making sure that you can change and adapt as fast as possible.
So that's really interesting. All the things you've just spoken to me about there are kind of pre-sale. My interpretation of kind of chatbots and stuff has always been post-sale help. So you're saying it's not just for that person that says kind of where's my item or something. It's pre-sale stuff as well.
Yeah, it certainly is, to drop our brand name in there. It is, but it sort of came out of support, the whole notion of if we can help our customers self-serve more and faster and better, it means that we don't get all that all those tickets in that our human agents need to handle, and that's a good place to start. And that's sort of where also the more simple bot solutions started. That's also where all the agency, the consultancy, the Deloittes of the world recommended that start there, because that's a huge bottleneck. But what we see from customers always is, even if they start there, number two, because they dig into data, they can see, wow, 30% of everything, all the questions here, if we were able to answer them while you were buying something, maybe we could help you then there, so you didn't return the product, but also maybe you would actually buy something. So they have a lot of data that are naturally leads to, wow, if you can provide this help pre-purchase, then that should be much more helpful for our visitors, and again, aiding to providing a better customer experience.
Okay, so let's bring this round to Black Friday then. Today's all about anticipation of Black Friday. So how can conversational AI kind of help all of the challenges that retailers are going to have during the silly season?
Oh, it's going to solve all of it. One nice way.
Every single one.
Yeah, exactly. Everything's solved. Boom. Conversational AI for everyone. No, it has a lot because it's in its nature is super scalable. So that means that with the change in demand you may have, you can cope with that much easier, even in a post-purchase scenario, right? And that's where many companies start. The frequent shop, like being able to process thousands of where's my order and those type of conversations per hour. You can't do that if you don't have this kind of technology to help you do that. So there's something about the scalability, but also in this Black Friday, which is special with all the supply chain challenges, and do we have the right products in stock? Is it available? Can we actually sell that? Well, again, if you can help customers find more of the right products when they purchase, that means that you will have much less returns on the other side. So there's both sides where you can do that. And then again, it's also about the customer experience, like your previous guest mentioned as well. We come to accustomed to want and need a certain level of customer experience, and this can help that, not only in itself, but also then the agents that don't have to answer for the 67,000th time a day, where's my order? That's outsourced to the technology. Then they can focus on really helping you find that right gift for your fiance because you forgot it's her birthday the day after, as an example.
I think we've all done that. So last question for you, nice and simple. If anybody watching this wants to know more about how conversational AI might fit into their Black Friday strategy, where should that person look?
Oh, luckily we have an answer to that. Of course, they can check out certainly.io. They can schedule a demo and hear more. We also have plenty of case stories that explains a lot of this. We also have a recurring e-commerce corners and webinars that addresses exactly this. And the next one is actually about creating the best possible user funnel during Black Friday. If you head to our website, you can sign up directly there, certainly.io.
Marvelous. Henrik, it's been wonderful having you on. Thank you very much. And I hope you go enjoy the sunshine.
Oh, I will. And thank you so much for the opportunity. Have a good day.
Thank you very much.
Bye.
All righty. So up next, boys and girls, we have another guest speaker. And I'm very excited about this lady coming on. It's Bobby from GFS. Bobby, are you there?
Hello.
How are you doing?
I'm good, thank you.
And in which part of the world are you broadcasting from?
Excuse me. I'm in the very exciting location of Croydon.
Oh.
But I have to, it's got such a bad rap. Look, it's not as bad. Actually, I should just qualify that. South Croydon.
Croydon.
South Croydon, part. The glamorous part, yeah. And we do have a blue sky, just like, was it Tom that just said he had a blue sky? We have one here too, Tom.
Henrik will be jealous.
Oh, Henrik. Yeah, sorry, Henrik. Yeah.
So, Bobby, would you mind please introducing yourself and a little bit about GFS as well?
Sure. So, hello, everyone. My name is Bobby Tulis. I'm the Group Marketing Director for GFS. GFS are the industry's largest provider of managed multi-carrier services. We set ourselves up in more than 21 years ago. So we were the first, and today we're now the largest. So what we do is quite simply take care of e-commerce parcels, get them to wherever they need to be, from checkout to doorstep, anywhere in the world and back again. And we work with all size of businesses, from the large online retailers like Wilko's or June Shoes, down to sort of smaller businesses, medium-sized.
Nice. So I understand GFS, you are what's called a multi-carrier kind of services provider. And I believe you supply it to most of the retailers in our panel, if I'm honest, a nice big chunk of retailers. So looking at what you must know, how are parcel forecasts looking for peak, and how is that comparing to previous years?
Sure. Just one slight clarification there. Yes, we are multi-carrier services provider, but there's a very important word that goes in front of that, and that's the managed multi-carrier services provider.
So clarify it for me. Tell me what that means.
It means that we're not just selling carriage. It means that there's a lot of value add that comes with our service, in particular our expertise, our hands-on approach, and what we do, especially when we come into our real strength when we're in peak, around how we work with our retailers and our customers to make sure that we protect delivery through peak from them, and that they, once they've made the sale, delivery is not going to let them down.
They can just forget about it. You guys will sort it out.
Yeah. So it's a good time of year.
Forecasts for parcels.
Mm-hmm.
What are you thinking? What are you seeing?
Pretty much following the same kind of patterns as you've shown on some of your graphs today. So traditionally, the last 3 months of the year, October, November, December, is when we see the biggest quarter in terms of parcel volumes that we're shipping. And this has been true for more than 21 years since we've been in business. If we compare the last 3 years, so go back to 2020 when we were in lockdown, we see the same pattern. We see September month is pretty flat compared to August. This year, we did see a slight dip in September, but I think that was impacted by, there was one less shopping day. We had the bank holiday because of the state funeral. And also this year, there's a lot of anxiety and concern around cost of living. So I think that's impacted spend in September. But then September to October is when we begin to see volumes pick up by about 10 to 15% month on month. We've yet to see that pick up in October, which is pretty much what you're saying, what you said today. However, we've still got a few more shopping days to go. So before we close out the month, so it could still sort of follow that pattern. But come November is when we see the real upswing in in sales and parcel volumes. And we see that carry on through November, December, and into the January sales, early January. In 2020, of course, we saw the biggest jump in parcel volumes from October to November. And we all know why that was. We saw volumes jump up by about 50%, from one month to the other. In 2021, we saw a strong jump last year, but not as huge a jump because obviously consumers were starting to go back to the high street. So I think we saw an increase of around 28%. So still really good performance, but not those crazy levels that we saw during lockdown. I think this year we expect to see the same pattern, follow the same. We'll see another peak, but I think retailers are being more conservative with their forecasts for this peak, only because last year they were a bit over ambitious with their forecast because they were using 2020 as a benchmark. Right. So I think this year, I think the forecasts are far more robust and realistic.
So, because there is so much uncertainty around kind of consumer confidence and what they're going to spend, it must make coming up with those forecasts like near impossible for people to actually do. It must be super tough. What do you think about that? And what's the knock-on effect for operational challenges to actually do it once you're in the middle of peak, going, oh my God, things are going crazy. How do I deal with this in comparison to what my forecast was saying?
Yeah. My view is if you fail to plan, you plan to fail. It's as simple as that. But however, that's not just my view. That's what, best practice is, that you're going to start, you spend months working on your forecast. And we certainly work with our customers right from post-peak wash-up, January, February, we review the previous peak with our customers, and we spend months building those forecasts, taking into account all sorts of factors that might impact spend and therefore delivery capacity. So I think that forecasts need to be done because, like it or not, carriers have a cutoff whereby they expect you to submit your requirements for peak, and that's normally around August, September. So those plans are already in to lock in the capacity that you need. However, with so much uncertainty as we're facing now and volatility, now more than ever, you really also need to, and again, it's best practice, but we need it more than ever now, is plan for contingency. So as well as doing your forecasts, you also need to be working through all those what if scenarios. What if this happens? What if there's a Royal Mail strike? What if, all these different what if scenarios, so that at least you've got, a backup plan for when the unexpected happens. And I can tell you, after 21 years, just when you think you've seen it all, there is always something that will come up that you haven't seen before. Okay, so you've got to have a forecast. You need to have, more importantly, your plan B. And the third tip I would say is that, there's still a lot of volatility and uncertainty, which means that some of those forecasts may be over or under. There may be some, scenarios that you haven't been able to plan for. So it's absolutely vital that as you get into peak from the first day of trading, you are talking every day with your delivery partners to give them sight of what orders and volumes are coming through to manage any fluctuations. So that's really important. We're in the situation, we have the benefit of working across multiple retailers and multiple carriers. So our logistics and operations team are able to shift volumes around to make sure that everybody gets what they need and it all works out in the end. But a lot of retailers don't have that luxury.
We've got about 2 minutes left, and I've got a very specific question for you to close with here. What do you think is going to happen for delivery options that are being offered by retailers during peak? What do you think they're going to do?
Okay, so first of all, I don't think anything's going to change. I think that we will still see the mix of broad delivery options, from your premium services, next day, free, to standard delivery options. And that's just best practice, right? However, I think that consumers are going to think twice about paying for premium services, especially if there's no urgency, and especially if they've just bought something which is discounted. I think in today's climate, they will think twice. I also think that now's the perfect time for retailers to rethink their policies around free delivery and free returns, because we've seen fuel prices go through the roof. The average fuel surcharge on air transport for 2021 is like 38%, compared to last year was, if I get this wrong, 19.75%.
Oh, lovely.
So that cost is going to hurt your bottom line. It's also, if you're offering free delivery, that cost is going to hurt your bottom line. It's also going to hurt the planet. So I'm hoping that retailers will have the courage to follow in the steps of Zara and Next, and look at maybe stopping free returns, and maybe even free deliveries, especially on discounted goods.
Marvelous. Bobby, it's been wonderful speaking to you. I will leave you be and let you go enjoy the wonderful sights of South Croydon.
Yes, thank you.
Thank you very much. Anybody looking to learn more, please do go and look out for GFS online. Give them a quick Google, boys and girls. So we've come to the last section of today. It's going to be a super quick one. We're going to talk about campaign launch dates. So it's all around when retailers are actually starting their campaigns. And we're just going to change the screen. Give me 2 seconds to flip it over. What we're going to look at is when retailers actually start their Black Friday campaigns. And IMRG track a panel of companies, 181 of them. And all throughout the month of November, we work out when they start their Black Friday campaign, i.e. do they have a live sale on their website for that date? What you are looking at is a current view of all product sectors, and it's 2017. So along the bottom is the date throughout November. So on the furthest right-hand side here is Black Friday. Then we've got 1 week away from Black Friday, 2 weeks away, and 3 weeks beyond here. The y-axis is showing the number of retailers from that sample of 181 who had a live Black Friday sale on that date. And this is what 2017 looked like. So their website had to have something on the homepage that said Black Friday sale live right now. And you'll see the Monday of the Black Friday week is when the biggest jump of retailers starting to have their campaigns was. If we add in 2018, quite interestingly, you saw more retailers going earlier. The red on the same date is higher than the green, bigger proportion of that same 181 retailers. 2019, the trend continues, more retailers going earlier in the month, a noticeable chunk this point on the Monday 1 week away from Black Friday being live. Then along comes the pandemic and everyone goes berserk because the high street was shut. They started much, much earlier during that month. And then the following year, which was last year, you can see it was pretty high, but not quite as high as the pandemic year. Now, we've shown this chart quite a few times, and every time IMRG talk about Black Friday, we normally bring it up, but there's an extra dimension that we're going to show for you the first time today. That is showing it by product category. So if we go up to the top here, we can split it to show you what that looks like just for clothing retailers. And the trend is largely the same. That will be clothing here. Pretty similar. You can see the yellows are the most prominent, followed by pretty strong results in the purple. But noticeably, the purple line, i.e. 2021, is roughly on par with 2019. For something like home and garden, that also follows a pretty similar trend. But noticeably, the home and garden lot started a lot later in 2021 than they did in the previous 2 years. You'll notice none of the home and garden retailers in our panel had started until at least Thursday, 2 weeks away from Black Friday. Whereas, I know the numbers are small, but still fewer retailers. Now, the reason I'm showing you this, and the bit that I would like you to concentrate on and the takeaway from this section, is health and beauty. So we had about 15, 16, 17 retailers who are just health and beauty in our panel that we look at. And you can see that the health and beauty guys in 2021 went very early with their Black Friday campaigns. The purple lines are pretty significant, very far away from the big date. Far earlier than any other product category did. Health and beauty seems to be the one that is most susceptible to those campaigns launching right at the beginning of November. So if you are in that space, do anticipate a lot of competition very early on for the Black Friday month, because it is a month, boys and girls, unfortunately. So that is the end of this little section. It is coming towards the end of the webinar now. Last thing, I think we might have a quick promotion for next week's webinar, which of course will be on at the same time, Thursdays at 2. Do sign in. It'll be a different presenter. My colleague Andy will be back. Normal service will resume, and we will be into the depths of November. All throughout the month, we will be reporting to you how Black Friday is going, how the campaign launch dates are doing. Do not divert your eyes from that weekly webinar. But other than that, thank you very much for watching, ladies and gentlemen. Thank you to all of our guest speakers today, and we look forward to seeing you next week. Thank you.